Hello, it's Wednesday the 4th. I'm FxPlew and we're back in amongst it for the market brief. So pretty much all the reports being released about the UK economy and the year ahead paint a pretty grim picture at the moment. It seems that nobody can find a reason to challenge the Bank of England forecasts that the economy is in for a fairly deep recession that should last about a year. Inflation remains challenging, that's despite petrol prices dropping and wholesale gas prices pulling back to a level not seen since before Russia invaded Ukraine. But the Bank of England looks likely to continue with further rate hikes to combat this and try and pull inflation back under control. One positive amidst this sea of gloom is the unemployment rate. That's fallen to 3.7%, and while forecasts suggest that this will likely rise as the economy slows, possibly peaking at around 5 or 6%, for the time being this still represents a pretty solid base. The consensus for the Fed minutes is that any change in sentiment from the November meeting is fairly unlikely, and market sentiment expects the 50 basis point rate hikes to continue from the Fed for the short term at least. The economic projections delivered at the last meeting were relatively positive, and the market's fairly split between those who are fearing that the aggressive rate hike action from last year will cause a recession in the US, and from those who believe that the Fed is well on the way to engineering the soft landing within this economic recovery cycle. We have non-farm payrolls due on Friday. This could shift sentiment slightly or wildly if the data is far away from forecast. But for the time being, the forecast is for the headline number to be around 200,000 new jobs for December. In itself, that would be a pretty significant drop in job creation from the 263,000 new jobs in November, but US interest rates have gone up from 0 to 4.5% over the past 12 months, so sooner or later a drop in job creation was to be expected. As a friendly heads up though, for the sweepstake on Friday, headline forecasts range anywhere between 175 and about 230,000 new jobs at the moment, which represents a pretty wide band to base your bid on. We'll come back to this later in the week. In the market, sterling has started the year pretty quietly as the market is waiting for the Fed minutes and for non-farm payrolls this week. We drifted back through the 120 level against the dollar yesterday. We opened around 119.85 against the dollar. We're about 113.40 against the euro, and euro dollar is about 105.70 this morning because the dollar index posted the biggest single day gain since mid-December. That topped out at around 104.85 yesterday. Right, that's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.